I'm going to give him something to talk about. My next guest, Charles Nenner, Executive Director, Charles Nenner Research Center. He joins us from Amsterdam. Charles, good to have you with us on Bloomberg.
Hi, how you doing?
Good, thanks. Tell me, how's the market doing? S&P 500 at 1460 today on the close. Are you long or are you short?
Well, 1460 was exactly our level.
Exactly your level for what?
For our upside price target.
So what happens next?
Well, what happens next is if we might go through it, it's a different story, but I think it's becoming very risky, and we're tightening stops, and we'll just wait for a sell signal. But we don't have much of a long position. I think looking at my technical model, it looks toppy to me.
So what is the sell signal?
Well, the sell signal is, as you know, I work with price targets and cycles. The cycles tell me when it's going to happen what. And the price target is calculated by an algorithm that tells me if it goes down, how low it goes, if it goes up, how high it goes. And then I have a technical model of 200 indicators, and they change about once a year, sometimes once every 2 years. So they only predict a major market move. Now, they're not showing a sell yet, but they're weakening the last 2 weeks.
If they're weakening in the last 2 weeks, what would indicate to you whether a decline in stocks is coming? And also, is it a serious drop in stocks, meaning more than 10%?
Yeah, I said at the moment I want to use every short-term cycle high and sell signal as a more important sell signal. Because different reasons. One of the reasons is things start to be looking okay right now. And as you may remember, we had a major buy signal the first quarter of 2009. And I tried to explain to people that the people who bought then knew something that other people didn't know. And they probably knew that things would turn out in a reasonable way a year or 2.5 years later. And once everybody knows it, the market doesn't discount the news twice. So then they start taking some profits.
What are you seeing out of the tech-heavy NASDAQ?
Same thing. I think it starts to be risky over here.
Charles, tell me about crude oil, if you can.
Yeah, crude oil is an interesting story. It hit our upside price target of 100, and it's on a sell signal, and we have a long-term downside target already for half a year of 68, so it could go still lower.
And what about natural gas?
Natural gas is not doing much. It hit a major low at 270, 75, and it started an up move, but I don't see much movement. I think it will continue in a trading range for a long time.
Now, you say that you are continuing to be positive on gold and silver. Why?
Yes. What we did is we sold the gold at 1900 and just around 1600 something. I forgot to went in. Right now, gold doesn't make much progress because there's a cycle that goes down into the beginning of October. But once that cycle is over, I see renewed upside. The good thing about gold is that although the cycle is down, it doesn't do more than just stop where it is. It hasn't been trading anywhere for the last 10 days. It closes every day unchanged, and that's because there's a cycle that gives some downside pressure. But again, that cycle should turn up again in October.
What do you see gold hitting?
Well, we have a long-term price target of 2,500, and that's what we're looking for. So we went out at 1,900, so I went in again. Our first upside target is 1814, 1850, and then we have to take a look if we're going to go out for weakness or we just stay in for the long run.
Charles, what about investing in silver? Do you think that we're going to get $40 an ounce silver?
Yeah. The target is $40. The first upside target is $40. And I think still we're in a major bull market for gold and silver.
All right, we're going to continue the conversation with Charles Nenner, Executive Director at Charles Nenner Research Center. Well, that gives us a perfect segue to ask our guest what he thinks about European equities. We've got Charles Nenner, Executive Director, Charles Nenner Research Center. He's joining us from Amsterdam. Charles, what do you think about buying European equities?
Well, we have been concentrating on the Dutch and the German markets by buying iShares, and we felt they would outperform, and that's what they did. We think the European equities, of course, for the obvious reasons, are still undervalued, and we like better than.
What about the euro?
What about the euro? The euro is experiencing a bounce in the bear market. Being here in Amsterdam, you get much more information on what the Europeans really do than when you sit in the United States, don't have that much information. And I think the euphoria is going to be over in a couple of weeks, and then we have seen the bounce for the euro, and we should go down again.
So will that affect European stocks as well?
No, they like actually a lower euro because it's better. We're in a very crucial time. I would urge people who listen to this to really try to go on the website and take a look at our research. They can even order it. We don't charge from the beginning because, like in 2007, 2008, these are very crucial times. It's very hard to know based on where the economy is going, where the bond market is going, where gold market is going. If you listen to the news, you're always on the wrong foot because the news is already in the market.
Charles, I want to ask Charles, what have you gotten wrong in the last 6 months?
What have we gotten wrong?
Every trade has been profitable?
Yeah, I'm thinking, what did we get wrong? We were long the corn, wheat. We made very, very nice profits in that. We were going short the bonds at the high, buying the TBTs. That was our major position to buy TBTs. I remember saying
TBT is the exchange traded fund.
Right, TBT, it goes up when interest rates go up. And I remember writing that if a person thinks that interest rates will never go up again, then he shouldn't follow this trade. But it's obvious that interest rates are not going to stay this low, so buy the TBT because they go twice as fast as the bounce. So it's like a bit leverage play. What else? We were long the gold. We played some natural gas. I don't know. It's worthwhile to watch it. It's very difficult to say actually what didn't work out.
Well, you're on the ground in Amsterdam. Can you give us just a little bit of color of what the environment is like there?
Well, it's a big difference. I said this on a show in the Netherlands. There's a big difference between Americans and Dutch people. When America is having a hard time, people say, let's put our shoulders under it, and let's do it. And the Europeans kind of become depressed. And the interesting thing is, if America, let's say the country would make $100 and it doesn't have enough, then they say, let's try to make $200. And Europeans say, with $100, let's try to redivide it in a more honest way. They don't even come up, maybe we should make $200. They just say, that's what Obama says. We take it from the rich and give it to the poor, and we divide it up in a more fair way, which doesn't really help you build an economy.
We've got to leave it there. I want to thank you very much. Charles Nenner, Executive Director, Charles Nenner Research Center.